Hello, I'm Dan Genovese, Director of Consulting at Entercom, and I have a great privilege today to be interviewing the executive team at Horizon Energy Global Corporation. I'm joined today by Stephen Bruner, President and CEO, and Jonathan Rudney, who's the Executive Chairman. Gentlemen, welcome today. Stephen, good to see you.
Yeah, thanks. It's really nice to be here with you.
Yeah, and Jonathan, same thing. Good to see you. Thank you for joining us. Gentlemen, I'm going to ask you kind of a very broad question, and that is for you to tell me a little bit more about your company and the background of Horizon Energy Global Corporation.
Sure, Dan, thank you. We started this company in 2015. It's a private company. We invested our own funds to get it started. We capitalized it with about $8 million. And our purpose was to invest in conventional opportunities that we felt were areas that we were familiar with, that we had experience in, that were not highly competitive, that we could bring to bear our experience and our technology, our background in 3D interpretation to discover significant reserves, both oil and gas. We're an exploration company, and that's really where we're coming from. Stephen?
Yeah, thanks, Jonathan. So we are a conventional exploration production company, oil and gas. We entered two areas, California and the North Sea. We had to be comfortable that they were prolific producing basins. We wanted to know that the hydrocarbon resource was there. We had to believe that we had a technical and competitive advantage. So both in California and the North Sea, they were, for different reasons, perceived as disadvantaged, which means we had a lower cost to the basin entry. We had to believe that through application of 3D seismic and reprocessing and interpretation, we could reduce and mitigate risk. We built this company on the basis of long-term oil prices being around $50 per barrel. So our economics with what we plan to do and have done are competitive and yield good rates of return with $50 per barrel on oil. Of course, with the current prices spiked because of shortages and geopolitical concerns, the profitability is much higher. In California, we shot a couple of proprietary 3D seismic shoots. We drilled 6 wells. We had 2 major discovery areas. Since inception, we produced about 900,000 barrels of oil. So we're confident that entering into an area where 3D seismic is applicable gives us a competitive edge. We're successful and we know what we're doing. In the North Sea, the entry point was for some of the same reasons, for geopolitical reasons. At the time of entry, majors were leaving the North Sea, and we decided it was a great time to enter because it would be less competitive. We have a great technical team there. They had a concept on a new exploration area called the Mid-North Sea High. Over the past 7-8 years, we've aggregated about 600,000 acres. We have 2 seismic shoots now with modern 3D seismic covering our acreage in the North Sea. We have, to date, inventoried about 2 billion barrels of prospective resources. That could be oil and gas condensate. We've looked at the economics of a development in the North Sea. They're robust at current prices. They're robust all the way down to $50 per barrel. So what we really do is we explore for conventionally oil and gas in 2 basins where we thought we had a perceived advantage, and it's proved so far in California to be correct. Our intent is to earn high rates of equity return for our investors by successfully exploring for and producing oil and gas.
Okay, yeah. So how much investment has been made into Horizon Energy Global so far? And then what's the investment needed? And maybe we break it down between North Sea and California. and which one's going to, maybe come first in terms of just drilling and development and production?
To date, we've invested about $30 million, again, of internal funds, 20 million from equity and another 10 million from reinvested cash flow, both in the UK and in California. And we've really shouldered, the risky part of both these ventures. And with these discoveries in California, we're in a developmental phase right now. In the North Sea, we will have sufficient proceeds to drill our first exploration well over there, 100% if we need to, but we are in discussions with several major oil companies right now about taking a participation interest on a promoted basis.
Yeah, Stephen, I'll ask you if there's anything you want to add to that, and specifically, maybe you can elaborate how quickly, given commodity prices right now and oil prices, how quickly can you get production in line in California, based on your time frame that you guys
Sure.
have planned out?
So as Jonathan mentioned, we have a near-term investment plan in California of about $5 million. It is the benefit of working with us now in California is that we've taken the risk, we've drilled the exploratory wells, and we really are in a development program. I will say also that we've identified about 30 million barrels of exploration opportunity prospective resources in California, in addition to the development we're undertaking. We plan to spud our first well in the fourth quarter of this year. Because we are currently producing, we've already invested heavily in the infrastructure in California. So the quick answer is, as soon as we drill and complete a well, we can turn it on.
Okay.
I'm sorry, go ahead.
No, go ahead. As soon as you complete it, you can turn it on. And these are conventional wells. Is that correct?
Yes. So what I mean by a conventional oil and gas exploration and production company is we're not in the resource plays for a number of reasons. So we don't drill horizontals, we don't frack, and we don't stimulate. We drill our wells, we run casing, we perforate, and we produce. Of course, in California, we comply with and are comfortable as an operator there, successful operator, with all the regulatory and environmental issues that come up in California. And because of that, we also don't flare much gas. It's just not allowed in California. So we kind of hit the narrow window where we do things conventionally. We're not in heavy oil. We don't steam flood. We don't frack. We don't stimulate. We don't drill horizontal wells. So it is the least impactful negative outcome for hydrocarbon exploration and production that can be done with today's technology in California. In the North Sea, it's a bit of a different story in that we have spent the past 6-7 years aggregating the acreage. We have gone through significant expense supporting technical teams and securing seismic. The nice thing about Horizon at this point is that we have developed a current inventory of over 2 billion barrels of prospective resources. Could be oil and gas condensate. I will tell you that in each well we're looking at drilling, there are multiple horizons, so we have multiple chances for success. Our acreage is close to a recent oil and gas discovery, which from an explorationist perspective significantly de-risks the prospect because we know we have oil and gas in the system. The seismic has clearly identified the structures, so another significant de-risk in the way we go about our technical business. And quite frankly, we should be ready to drill the first well either late 2023 or early 2024. So the takeaway for me is we're immediately actionable in California with production coming online as soon as we complete the wells. And in the North Sea, it's a very near-term exploration effort.
Yeah, so it sounds like you guys have formed a very technical management team, a very experienced management team. Let's talk a little bit about that, and because you have such certainty around the technical side of these basins and why you believe there's hydrocarbons there. Tell me a little bit more about the team.
Well, Stephen and I are the two chief executives, the main executives. We both have over 40 years of experience in the oil and gas business. My experience is more on the financial and building company side. Stephen is a petroleum engineer, and his background initially was as a petroleum engineer, and he has built some large divisions of public companies. And in the last 20 years, Steve has kind of moved into the executive suite as well. But both of us have very strong operational backgrounds, both onshore, offshore, internationally and domestically. Particularly my background, I was had formed and was one of the chief executives of one of the first few independent oil companies in the Gulf of Mexico back in the mid 1980s. And that's really where I got my start, and things had just built from there, and we expanded into many areas of the world and in the States as well.
So thanks, Jonathan. Yeah, an engineer by background, explorationist and business person by experience and growth through my career. Interesting enough, in prior companies, I've worked for small privates, I've worked for large publics, I've actually been the CEO of public companies before. Never lost the interest and the kind of desire to explore. In addition to Jonathan and I think the technical team in California is just as distinguished, although very focused. We have geoscientists and geologists with, much like us, several careers under their belt, decades of experience in the area. And in California in particular, not only do we have a very bright technical team, but through practice, we have proven that our seismic application and drilling techniques work. In California, we drill wells anywhere from 10 to 14, 15,000 feet. We have been successful in every well we've drilled. I bring a very strong operational background to this. I have operated domestically, internationally, and in fact, in a prior company, actually went to Thailand and developed an offshore oil and gas development with all the same kind of complexity that we expect to encounter in the North Sea. So it's not just that I think I can do it, I have done it. As well as the technical team in California, we have a very deep, experienced technical team in the North Sea. Again, like us, they've worked through several careers, they've been successful. And with the application of the seismic and the interpretation we've seen so far, we know that we're going to be able to mitigate risk. Now, in addition to that, we have, I think, a very distinguished board. And one of the board members, who's also a founding investor in the company, had a distinguished career in several large companies, Shell and Burlington, currently consults for most major sovereign funds around the world. And I bring him up in particular because Gregory Larberg, he's a technical advisor for us. So he's a renowned, successful explorationist in his own right. And when we first had the concept of exploring in the North Sea, of course, we sat down with Gregory and said, well, what do you think? Are we going to be able to apply our techniques and mitigate risk and have a chance, with reasonable expectation to be successful? We're in the North Sea because he liked it and wanted to do it. And I just wanted to say that he's an ongoing board member and he is head of a technical committee for the board. So we have a very expansive, highly experienced, successful technical team, both here on the corporate side and both California and North Sea with the technical teams.
Excellent. Two things drive an opportunity in oil and gas, and that is in each the California and the North Sea opportunities. What's the volume of resource, recoverable resource that you guys are looking at and the technical data is implying? And then what's the cost for lifting and finding and producing those barrels? Is it low enough where even if the current high commodity price environment changes, that you'll be making some good money on that production?
The short answer is yes. In California, we have a finding and development cost, and we actually look at it as fully inclusive. Finding development cost of probably less than $10 a barrel and a lifting cost of around $15 a barrel. So our all-in cost in California is about $25 a barrel. We run our baseline economics at $50 a barrel and have to have a reasonable rate of return plus 20% rate of return in order to make investments. And not only is it a financial theoretical model, but we lived it in California. We demonstrated that ability. So a typical well in California, I think dry hole cost could be $3.5 to $4.5 million. To complete them, it's another $1 million to $1.5 million. Typical well recovery in California, our shallow wells, think 450,000 barrels per well, and our deep wells, 850,000 to 1 million barrels per well. So the resource is significant. And yes, we have robust economics, down to $50 a barrel. That's been proven in California. Now in the North Sea, the prospective resources and why we're excited about it is that they're world-class kind of numbers. To date, we have identified over 12 structures and over 2 billion barrels of prospective resources. And again, in each one of these prospects, some are structural in nature, some are four-way closures. Probably one of the first wells we'll drill is in the range of 125 to 100 million barrel type prospective resource. I can tell you that we've done it. We have, in addition to the geoscientists and geophysicists, we also have engineers employed in the North Sea. And so we've run an economic model on what does that mean. So at current prices around $80 a barrel, I know they spike up and down a little bit, but at $80 a barrel and 150 million barrel discovery, we know we have a PV10 in the range of $3 billion. A well to drill and test in the North Sea is kind of depending on where we do it and how deep it is, probably $15 to $20 million. So the scope of the resource in the North Sea is just world class. I mean, there aren't many places you can do it. And it's in a place where the government and the fiscal terms are very stable. There's been some push and pull within the UK government in past history about how much exploration and development they wanted to continue to do as they transition to a green energy basis. Current geopolitical instability in Western Europe has driven practicality in the decisions. And I can tell you now, we are highly encouraged to conduct our business, explore for, and hopefully produce oil and gas in the North Sea. Jonathan?
Yeah, I think another thing on the North Sea that's meaningful is that, most of the big discoveries internationally are in very deep water, in governments that are marginally politically stable. Well, all our wells here are in very shallow water, 100, 150 feet, where the drilling depths are 3,000, 2,000, 3,000 meters, 8,500 feet. And again, because there's infrastructure in the area, because everything can be fixed rather than floating, our cost structure and our timing of development is much more attractive than some of these big areas, in South America and Africa and Southeast Asia. So it's actually a very good environment for making world-class discoveries. As a matter of fact, there's two interesting articles that actually we have on our landing page of our website. One of them is by a very well-known Norwegian consultant called Rystad Consulting. And they basically did a survey or a study last year showing that the UK was the best place for offshore drilling, the most profitable place of any country in the entire world. A very interesting, in-depth article. The other thing that I wanted to mention is that the UK government itself has pinpointed our area, this mid-North Sea high area, as their premier exploration area in the country, offshore in the Gulf, offshore in the North Sea. And a lot of their focus right now is on that area. So I think we had this foresight about 6 years ago to start in this area when it was a little bit about a favor. It was more of a frontier area. And over the last 5 or 6 licensing rounds that used to take place every year, we've we've assembled this very significant contiguous acreage position, as Stephen mentioned, of over approximately 600,000 acres. And so we have a lot of running room. We're surrounded by Shell and other major oil companies, but we believe that we've kind of got the sweet spot of this area.
Gentlemen, it sounds great. Sounds like incredible acreage that you guys have available for development. And I'll ask you one last question in closing. What are you looking for right now? Are you looking for investment partners? Are you looking for contractors? Farm-in partners? What are you looking for right now at your stage of the company to continue to move these exciting prospects forward?
We are talking to some major companies that have expressed interest in our area and participating on some kind of farm out basis, but we haven't finalized anything. We're still looking at our opportunities and deciding what's best for the company.
Great. Stephen, anything to add to that before we wrap up?
Yeah, I guess from our perspective, we chose these two areas knowing that the North Sea was a longer term exploration opportunity. But in California, we were able to very quickly bring production online. We have significant development inventory. We have, again, about 30 million barrels of prospective resources, which are slightly more exploration oriented, but under our current license and seismic. So all of it's immediately actionable. We look at California as the financial backstop of the company while we explore for significant world-class reserves in the North Sea.
Yeah, Dan, I would say that using a baseball analogy, the North Sea is kind of like our grand slam home run in the World Series, and California is hitting singles and doubles all day.
Yeah,
and
I think that's a great analogy based on what you've told me about the resources and the opportunities. I would encourage everybody, if you're interested in more information about Horizon Energy Global, their website is exactly that, horizonenergyglobal.com. You can visit the website. You can get contact information so that you can have a conversation with Jonathan and Stephen. I think they would welcome that from anybody that's interested in investing or participating in some way in the project. Gentlemen, thank you very much for your time today. Extremely excited about watching you guys grow this company and the future of Horizon Energy Global.
Thank you, Dan.
Thank you very much for your time today.